The bridge of success is never crowded because it is only traversed by those brave enough to face the struggles, the sleepless nights, the unmatched focus, the perpetual dedication, and of course, the discipline required to achieve greatness. Mark Zuckerberg once said, "The greatest risk is the risk of not making a risk." So the choice is yours, guys. Cross the bridge and reap the reward, or watch from afar as others seize their destiny. My part is to show you the way I know best and comprehensively explain it to you in the simplest and best way I can. Now, without wasting much of our time, let's dive into today's video. So in our previous video, we have discussed and talked about the RSI indicator, otherwise known as the Relative Strength Index, and how we can detect trend reversal using this RSI. Today, we are going to advance and enhance the power of the RSI indicator with the help of another effective indicator called the Stochastic RSI. Okay, the Stochastic RSI can be found, let me go to the hot section, choose an asset, let's say BTC. Okay, so I just want to show you the Stochastic RSI. So when you get to this interface, all you have to do is to click on this place right here. If you don't want to click on it, you can just slide this indicator, this list of indicators, just slide this to the left like this. All right, so you slide until you reach to the ending. All right, when you get to the end, you will see the Stochastic RSI over here. All right, so you tap on it. This is how the Stochastic RSI looks like. All right, so this Stochastic RSI is very effective and it works hand in hand with the normal RSI. So considered by many as the boss of the boss. Okay, the Stochastic RSI takes the normal RSI to the next level, providing unparalleled confirmation and precision. Okay, when you use the Stochastic RSI, no longer will you rely solely on the RSI signals. All right, with the Stochastic RSI, you will be the master of your own trading domain. Now, before we dive into learning how the Stochastic RSI works, let's quickly remind ourselves what RSI is. Although we have done it in our previous videos, there are some that are viewing for the first time. So in our previous videos, we learned that RSI, otherwise known as the Relative Strength Index, which is this one over here, right? Let me double it on so that we can get a view of what we are doing or what we are talking about while we are explaining it. So the RSI, known as the Relative Strength Index. Okay, let me give you a difference. Let me show you the difference. This one here is the RSI, and this one here is the Stochastic RSI. Okay, so this RSI is a technical indicator that is used in financial markets to measure the magnitude of recent price changes and determine overbought or oversold condition. Let me repeat it. RSI is a technical indicator that is used in financial markets or the crypto market to measure the magnitude of recent price changes and determine overbought or oversold condition. Some of us may not know what overbought or oversold condition is. Don't worry, I'm going to explain what it is. Okay, but for now, let me explain what I mean when I said to measure magnitude of recent price changes. Okay, so when I said to measure magnitude of recent price changes, I'm referring to the extent or the size of the price movement over a specific period of time. Let me give you a detailed breakdown so that you won't get confused. The magnitude of price movement refers to the value of price movement without considering the direction, whether it's going upward. Okay, let me show you what I mean. This is the high of this candle, and this is the low of the same candle. Okay, so this normal RSI over here, okay, measures the magnitude. The magnitude meaning the amount, the high this candle went divided by the low this same candle went. Okay, but we are not talking about one candle. RSI 14, which is over here, if you see the RSI indicating RSI 14, it means that the RSI is calculating the highs of 14 candlesticks, the last 14 candlesticks, divided by the lows of the last 14 candlesticks. Now the answer it's going to give, okay, the result it's going to give will determine whether we should buy in the market, whether the market is going upward or coming downward. I hope I'm making myself clear. So another example is that you see this RSI 7 over here, RSI 7 over here means that the RSI is calculating the amount of highs, which is the all-time high of 7 candles, okay, the last 7 candles divided by the all-time low of the last 7 candles. Okay, so whatever answer it gives will determine whether we should buy the market, whether the market is going up or the market is coming down. So RSI 7 is very reactive, it is very sensitive because it has to deal with just 7 candles, and RSI 14 is less reactive because it is dealing with the information or data of 14 candlesticks. Alright, so with this being known, we should be able to head back to the next topic. But now, whatever the value the answer gives, it is going to determine whether we are going to buy or sell. So the RSI, the stock RSI, will not look at the candlestick. The stock RSI will look at the result of the RSI itself and determine whether it is correct, accurate, and tell us whether we should buy or not, whether we should really buy or we should just hold on, or we should really sell or we should hold on. Now, the normal RSI has a value of 0 to 100. Okay, it is agreed that if the RSI value, which is this RSI we're talking about, the normal RSI, if this RSI, which is this one, if the RSI value shows 30 and below, if this RSI value shows 30, okay, and below, it means that it is due for oversold. Okay, it means that the market is oversold. Oversold means that the sellers of that asset, which is in this case we are talking about BTC. So oversold means that the sellers of BTC, okay, have sold a significant amount of this BTC, making it to become rampant and available in the market. And when an asset is rampant and available in the market, the demand for that asset will reduce because it is available. Okay, and when the demand for the asset reduces, the price will go down. The price of that asset will go down. And when the price of that asset goes down, the value of the asset will go down, making the asset to start having a downward trend. Okay, that is what oversold just means. And in other words, or should I say, likewise, the overbought condition happens when the RSI shows 70 and above. Let me clear this. Okay, so the oversold means that when the RSI shows 70 and above, then it is due. Let me tell you how oversold happens. Okay, when the buyers realize that the market is oversold. When the market is oversold, meaning that it has dropped from 30 and below, meaning that sellers have sold a lot of coins and buyers don't want to buy, which means that the demand of BTC, since we're talking about BTC, the demand of BTC has reduced. People don't want to buy, and the supply has increased. So the sellers are now competing for who is going to sell their BTC at a lower price. And that competition between the sellers makes the price to go more and more lower, and the more the price goes lower, the more BTC reduce in value. Okay, so with this, it will start to tempt the buyers. It will start to tempt the buyers to buy the assets when it is cheap, so that they can sell it when it is costly or when it goes up. Okay, and when the buyers begin to buy this asset, if it becomes oversold, all right, when the asset is 30 and below, they'll start creating a demand chain. All right, and when they start creating this demand chain, the more the buyers come into the market to buy it when it's low, the more the demand of that asset begins to increase. And the more the demand of the asset begins to increase, the less availability of that asset is going to be in the market. And the lesser the availability of that asset in the market, the higher the value of the asset. It will keep going up as more buyers come into the market until the RSI elevates, increases, and turns to 70 and above. And it is a general law in the crypto world that if the normal RSI starts showing 70 and above, okay, 70 to 100, then it indicates that that asset is due for overbought. All right, so overbought means that it is a possible confirmation that the asset will begin to find its way to reverse to the downward position, because buyers have already bought everything. So when they have bought it, they want to sell it because they obviously bought it when it was low and it has reached the price they want it to reach, so they want to sell it. All right, so now that we have understood what the RSI is, I believe we can move over to the stochastic RSI, okay, also known as the indicator that confirms the accuracy of the indicator. All right, so while the relative strength index RSI is busy measuring the lows and highs of price of an asset, okay, if whether the price have gone over or under a specific or overbought or underbought, the stochastic RSI on the other hand measures the normal RSI own high and low. In other words, it shows if a coin is too overbought or too oversold. Okay, so for example, let's assume that this RSI, let me be indicating a little bit. Let's assume that this RSI over here, which is the normal RSI, let's just assume that RSI is an acid. I just want to give a normal, a crude example. Assume that this RSI is an acid. Okay, so if this RSI is an acid, then that means that the stochastic RSI here is an acid indicator that indicates whether this acid, which is this RSI, is really acidic. is more acidic or less acidic. I hope you understand what this is all talking about. So the reason why this stochastic RSI is so important is because there are times when the market goes up and the RSI confirms an overbought condition. Okay, it confirms an overbought condition, but in reality, the asset does not have any plan of reversing. Okay, in reality, let me give you an example. For instance, maybe the RSI over here, as you can see over here, when it was 62, let me indicate it. Over here, when BTC was at 62,670, the RSI, the normal RSI 14 over here is showing 64. Okay, and RSI 7 is showing 65, meaning that this asset is overbought and is due for reversal. That is what this RSI is telling us, that it is overbought and is due for reversal. But as you can see, the stochastic RSI here is showing just 39. It means that it is actually not overbought. It might continue to go up. And what happened? It went up. Guys, it went up. So that means that this RSI sometimes might tell us that the price is overbought, but the stochastic RSI measures the average of the normal RSI and tell us if this chart frame will continue to go up or not. So I hope you now understand what this stochastic RSI, how important it is. And there are times where the RSI will show an oversold condition, meaning that the candlestick, okay, or the pattern, or the asset is due for reversal to the downward trend. Okay, and we'll just buy it because we think that, okay, now it has started going down, let's wait for a reversal, not knowing that that asset doesn't have any plans of reversing anytime soon. It's going to keep going down. So it is the work of the stochastic RSI to tell us that, wait, this asset is not going up anytime soon, so just hold on until I give the signal, the green light, meaning that until I am at 80 and above, then that is when you can be able to actually buy the assets. Okay, so I hope you understand what it means. So without wasting much time now, let's go to the strategy, or how you can be able to use this RSI, this stochastic RSI, to predict the markets properly. All right, so the next thing we are going to look at is the indicator settings. Okay, so since we know the stochastic RSI overbought condition is at 80 and above, and the oversold condition is at 20 and below, it means that when the stochastic RSI indicates 20 and below, you are free, or you can be able to confidently buy the coin and wait for it to rise. And when it is at 80 and above, then it is an indication that this coin has reached its high, okay, and it is on the verge, or it is preparing to go down. All right, so let's go to the indicator settings over here. So let's click on it, and then we are going to head over to indicator settings here. All right, click on it, and it's going to bring us to this interface. And now we are going to just go down until we find the stochastic RSI over here. Okay, so we'll just tap on stochastic RSI, and it's going to bring us to this interface. So we can see the length RSI, the length stock, the smooth K, and the smooth D. Okay, so the length RSI is used to determine the number of candlestick that the RSI will use to calculate the average value. So this length RSI just means that the normal RSI is going to calculate 14 candlestick. Look at the 14 I'm talking about here. So if your length RSI is at 14, it means that the normal RSI will calculate 14 candlestick. When the length stock is at 14, it means that the stock RSI will calculate 14 candlesticks that were calculated by the RSI. So if the length stock is at 7, it means that out of the 14 candlestick that the normal RSI calculate, it will take the last 7 and calculate, and use to calculate with it. Okay, but in our case, we are going to leave it this way, 14, because that is the general settings for this RSI. And the smooth K does nothing but straightens the line, or smooths the RSI, the stock RSI. Okay, it rounds up the number of the stock RSI. Sometimes the stock RSI gives points and values, but the smooth K just rounds it up to smooth the how will I put it, to smooth the work for us. Okay, and the smooth D adjusts the sensitivity. It just adjusts the sensitivity in order to produce more reliable signals. So this strategy is good. 14, 14, 3, 3. Do not touch anything. The only thing you can touch is the thickness. Okay, over here you can touch the thickness of the lines that will be produced to actually make it more visible for you. So let me put it to the thickest. I enjoy putting it to the thickest, and then you just click on confirm, and you have to go to your EMA. Right, I'm going to show you the EMA, and I'm going to tell you why we have to use it. The EMA should be toggled on, and it should be set. Look at the EMA over here. So there's a setting you have to put on your EMA like this. EMA1 should be 12, EMA2 should be 26, and EMA3 should be 50, just like this. Okay, so after these settings, you click on confirm and you go back to your interface like this. Okay, so this is it, guys. Now let me tell you when to buy. You buy, okay, you see, if you buy the asset if the stock RSI falls below 20, okay, and then rises back above 20 again, then you should buy. For instance, now this is BTC, okay, and the RSI over here falls below 20. It is indicating 12. Okay, so it has fallen below 20. We just have to wait when this value over here rises above 20. Then that means that this market that has went down is about to go back up. Okay, that is the first indication. Secondly, after this first indication happened, you reconfirm with the K line. This is the K line. Okay, the yellow one is the K line. So if the K line begins to cross above the D line, which is the purple one over here, then it is an indication that you should buy. And as you can see, the yellow line, which is over here, has started crossing above this purple line. Okay, it is an indication that you should buy. But before buying, wait for this stock RSI to start elevating and cross the 20. Okay, so the third indication is to use the EMA. Okay, so all you have to do is to come to this indicator settings down here and click on EMA over here. All right, so just click on EMA and it's going to bring you to this interface. Sorry, it's going to bring these lines. Okay, so when you bring this line, what you are looking for is you want this yellow line. You want this yellow line over here to cross above this purple line, okay, and then cross above this green line. So when the EMA line, when the yellow line on the EMA crosses above the purple line and crosses above the green line, then it is an indication that you should buy. Okay, so the yellow line is EMA1, the purple line is EMA2, and the green one is EMA3, as you can see over here. So if you get confused which one is the yellow, which one is the green, or maybe yours is different, just know that I mean when EMA12 crosses over EMA26 and crosses over EMA50, then it is the right time for you to buy. Let me give you an example. Okay, as you can see over here, EMA12 crossed over the purple one, which is the second EMA, which is EMA26, and crossed over EMA50, and what happened? The market went up. Okay, that is just how you can confirm the RSI indicator and the stock RSI indicator. Okay, that is how you can use them in conjunction. So however, there's one very effective way to confirm a market entry by combining the stock RSI with another indicator, another fundamental analysis indicator. So when the stock RSI enters an oversold territory, which means when it goes to 20 and below, there are specific candlesticks. Okay, there are specific candlestick patterns that are formed, or shapes that are formed, that you are going to look for. Okay, and these candlestick patterns are only located at the bottom, which is at the support level. This is what we call the support level. Let me draw a line so that you can understand. Okay, this is the support level. All right, so there are specific candlesticks that are formed at this level that will make you determine and will automatically confirm that this signal is meaning that you should buy. But as usual, this strategy belongs to my VIP strictly. So if you're interested to join the mastery class, you can contact me on WhatsApp using the description below. I know this is not easy, guys. Okay, I know, and I've wasted so much time, but it's not a waste. So I've spent so much time, and I'm just doing this to actually tag you along. It is not easy. If anybody tells you that cryptocurrency is easy, that person is just lying. Guys, it is not easy, I know. But those people that have experted themselves and have known the market like the back of their palm don't have two heads. They don't have more knowledge than you. All they have is determination, consistency, focus. Okay, they keep on going. Regardless of whether they fail or not, they keep on going until they become masters of what they do. So guys, please just give it more attention, give it more focus, and before you know, you have become an expert in whatever it is you're going to do. Just work hard and work smart. And I hope this video is helpful, and I hope you have a nice day.
You to pay attention to the following thing I'm going to say, because it's extremely important, because it's a mindset shift. It is the hard things in life that are the best things in life. It's amazing how God has linked difficulty and value. There is nothing in life which is valuable, which is not hard to obtain and hard to keep. If gold was everywhere, nobody would care about gold. So when you see something as hard, you see something as valuable, and you have to train your mind to be excited by hard things.